Mr. Adi Godrej, Chairman and Managing Director of Godrej Consumer, joins us from the sidelines of the City Conference. Mr. Godrej, thanks much. Well, the most important question uppermost now is the rupee depreciation. How does the rupee depreciation affect your company itself? You have imports like palm oil, don't you?
The rupee depreciation does to a certain extent increase our raw material costs. We also have borrowed in dollars for our acquisitions abroad, which we have to pay back from the earnings. But our international businesses earnings generally are reasonably dollar denominated. So their earnings in local currency increases if those currencies depreciate or appreciate, then the earnings decrease to that extent. So it won't affect us very much. The rupee has been depreciating for the last 2 years. It has not affected our performance. Our company has done well. I presume you are talking of GCPL. But however, I expect the rupee to appreciate over the next few weeks now.
Okay, you have given us some qualitative sense, but can you quantify the impact, even ballpark?
No, I don't think it will be any material impact. Generally, our growth in both sales and profits will continue as before.
Okay, Mr. Godrej, good afternoon. What about demand itself? Do you see consumer demand slowing down for your products? While your Q4 numbers were good, the FMCG space across the board has seen both demand as well as revenue pressures.
We grew in India at about 20% in our FMCG business, and we expect to continue to do that in Q1 and the rest of this year. Demand is good. We're doing well. Our products are doing well. We're in fact gaining market share in most of the categories we're in. So we don't see any major slowdown, and I expect our strong performance in the last financial year will continue into this financial year in GCPL.
Okay, and added to that, of course, the monsoons have started off on a good note. Will a decent monsoon make a seminal difference to your company? How dependent are you on rural demand?
First of all, the monsoon has started off exceedingly well. Almost all of peninsular India has got good rains. Sowing has started well. And monsoon clearly is a positive for our business, because in rural India demand does increase when there is a good monsoon. So that's a positive. But even last year, where the monsoon was bad, we grew at about 20%. So if the monsoon is really good, we could grow even faster. But a good monsoon is excellent for another one of our companies called Godrej Agrovet, which is a subsidiary of Godrej Industries. There, a good monsoon has very, very positive effects on the business.
Okay. Well, Mr. Godrej, the Godrej Consumer Management has been speaking about innovative products. Can you detail your market share in hair color in particular, where I understand innovation is maximum, as also your market share performance in home insecticides and soaps?
Last year, our share in household insecticide grew very considerably. We are by far the leaders in the field. Our share at the end of the year was almost 50% of the market. We are number 2 in soaps after Hindustan Unilever, and in hair color we are leaders, but we lost a little share over the last couple of years. In the last quarter, our share increased. Our growth was very good. We've introduced a lot of innovative products which have done very well. In this quarter, we are growing very well, and I expect in this year our share will grow very considerably in hair color too. In household insecticides and soap, we continue to do very well. Our growth rate in our FMCG businesses have been much above the average growth in the FMCG sector or in our categories.
Also, can you update us on your inorganic ventures? Will it be as pronounced in FY14 as in the year gone by? Anything on the table actually that you can speak about?
We have grown very considerably through acquisitions in the last few years. Our CAGR growth has been over 30% in the last 3 years. We have acquired businesses. We will continue to add to our acquisitions. We have a major acquisition agreement in Africa called Darling, which operates in 14 sub-Saharan African countries. We have already completed the first 51% acquisition in several of these countries. We will add some more countries in this financial year, and then over the next 3 to 5 years we have options to buy the balance 49% too. So that will continue to grow. Last year we acquired a company in hair color business in Chile. We'll continue to look at acquisitions which add value, which improve our earnings per share, and we expect to grow considerably inorganically too. Our objective in Godrej Consumer Products is what we call 10 by 10, to be 10 times our size in 10 years' time, which is a compounded annual growth rate of 26%. We expect to have an organic growth rate of around 15 to 20%, and the balance would be inorganic.
That's as precise as it can get for a 10-year plan. Thank you, Mr. Godrej, for joining us with all those details. Let's take a quick break. Market stabilized a little bit. We will concentrate on personal finance questions. Harshvardhan Rungta will join us.